Markets recovered really strongly in October after very weak August and September months. In the US, they saw their market grow by 8.4%, which is the strongest monthly return since 2011. At the same time, we've seen yields remain really low historically, globally. So central bank policy continues to dominate what's happening in markets. What we're seeing is a divergence as well. The US is starting to look to raise interest rates, whilst Europe and Japan are continuing to maintain policy to try to increase the growth or economic growth for their economies. At the same time, last month we saw China cut their interest rates, again to try to support economic growth. We've started to see housing prices in Australia moderate, and housing's been an incredibly important driver of economic growth in Australia, particularly with the slowing of the commodity boom. It is our expectation that housing as a contributor to economic growth will moderate in future. So China released recently their latest 5-year plan, and part of that suggested that they were going to grow less quickly in the next 5 years than they have recently. Still at very high levels of growth though. And from a social perspective, some of the things they talked about was a move away from their one-child policy. Now this is not likely to have a strong short-term impact, but it's very important as a long-term outcome, because we know a very significantly ageing population can drive lower economic growth. And so being able to address that by having not just a one-child policy, but starting to grow their population more actively allows them to grow in future.